In this video, I'm going to share with you why I'm bullish alternative investments. In 2024, I read the Tony Robbins book, The Holy Grail of Investing, and I also read David Swenson's book, Pioneering Portfolio Management. These books completely changed how I view portfolio construction and also opened my eyes up to the world of alternative investments. After years of studying markets and investing in stocks, I realized that the traditional playbook for building wealth had much more layers to it. So in this video, I'm going to walk you through all the reasons that I'm bullish alternative investments. And for those of you that are new to the channel, I'm Santiago. I'm a professional investment analyst, and I focus on helping investors build wealth with strategies that are typically reserved for the top 1% of investors. So to start off, let's look at how the opportunity set in public markets has been shrinking and why this shift in markets matters to you and building your wealth for the future. So let me show you a statistic that reveals why this shift in the public stock market is so important to your future wealth. So the number of companies listed on the public stock market has dramatically dropped from over 8,000 companies 25 years ago to just over 4,200 companies today. This shift in the number of companies listed on the public stock market gives you a narrower set of opportunities to find outsized returns in markets. To compound on top of that, markets have become more and more concentrated. The top 5 tech companies now have a more profound effect on the S&P 500 than previously in markets before. So if you're looking for outsized returns, you need to search in other areas of market. As a matter of fact, Tony Robbins highlights in his book that alternative investments have generated outsized returns for the world's astute investors for decades. As a matter of fact, from 1986 until 2022, private equity as a whole outperformed the S&P 500 by over 5 percentage points annually. During this same period, over the last 20 years, the active managers in the public stock market, over 94% of them have underperformed the market. And this just reveals just how difficult it is to find excess returns in public markets as they've shrank and become more concentrated. As companies begin to stay private for longer and not list on the stock market, the private markets and alternative investments have began to fill this void. So if you're looking for a more diversified approach that's less concentrated, where you have more of an opportunity set to outperform the S&P 500, you have to look to private markets and alternative investments. So even though there's been a drastic shrink in public markets, private markets at the same time have been growing at a fast pace. More growth means more opportunity sets. As a matter of fact, according to Apollo's research, there's about $68 trillion in public capital assets versus only $10 trillion in alternative assets. That ratio tells you where future growth can happen. With less capital going to alternative assets, you face less competition and often you find better company valuations. It's well noted that private equity alternative investments tend to have lower valuations than publicly traded assets that can run their valuations very high. So with this being said, there's this shift of companies staying private for longer and not going public at all. And much of the companies that stay private for longer are in sectors that drive much of today's innovation and economic value. Many of the fastest growing companies never go public, and they just rather would stay private because it's less of an administrative burden on them. They don't have to have quarterly earnings reports. They don't have to worry about the stock price going up and down on a day-to-day basis. So if you're only invested in public stock markets and not alternative investments, you miss that growth by only being on one side. As a matter of fact, as an example, one of our beloved pieces of technology, ChatGPT, is a private company. If you're not invested in private equity, you cannot invest in this company. There's also another factor to consider with public markets, and that's the increase of volatility due to algorithmic trading. When we're talking about alternative investments in private markets, there are less price swings because the pricing is done on a quarter-to-quarter basis versus a daily basis. And this quarterly pricing is based on business growth and business cash flow rather than just public market speculation on the price and what it's worth. And so this difference provides a uncorrelated return than your public stock market. So when you invest in alternative investments, you have a return driver in your portfolio that has nothing to do with the day-to-day performance of the stock market. Because of the future growth in private markets and the opportunity set, this gives the market a bullish backdrop where there's future growth opportunity that's outside of what we see on the publicly traded stock market and what's available. So I'll pause right here, and if you are finding value from this information, go ahead, like, subscribe to the channel, join my email list so that I can continue making more content just like this for you, the investors. So now that we know all about the opportunity using alternative investments, how do we access it? How do we access something like a private equity fund? Unlike stocks, where you can download a Robinhood app on your phone and easily access the stock market by just buying stocks on your phone, access to a private equity fund is a little bit different. So first and foremost, you need to be an accredited investor. If you are not an accredited investor, no worries, you can get there. It just requires a little bit of patience. The Securities and Exchange Commission has actually updated the definition of an accredited investor, and that change has allowed more people to access products like private equity funds and private credit BDC funds. More access to alternative investments means that there's more opportunity for capital to flow into these assets, creating even more bullish tailwinds for the asset class. That shift has led to what's being called the democratization of finance. More opportunity sets for more investors. And there's platforms and marketplaces that have emerged that have made these investments accessible, and now financial advisors and their clients can establish channels to participate in alternative investments that were previously reserved only for the top 1% of investors. And this was the idea behind Tony Robbins' book, The Holy Grail of Investing. This was a coming out party, for lack of better terms, for alternative investments, as this marketplace has drastically changed and expanded over the years. But I want you to keep in mind that private markets come with different type of risk. You face illiquidity risk, where your money is tied up for a certain period of time. You face capital calls. You face layered fee structures. You face the J-curve effect, where your investment value may go down when you invest in a private company before ultimately the company grows and it goes back up. So this requires a new level of understanding and active management in your portfolio, and you need to learn how these assets behave and how this can fit into your overall financial structure and conduct your proper due diligence. This is exactly what I do as a professional investment analyst, and this was the idea behind starting this YouTube page, was to bring this information to you to help you invest and think like the top 1% of investors. So to bring this all together on what makes me bullish alternative investments is that the public markets are steadily shrinking. This has been a continued trend over the last 25 years. We have a growing opportunity set in private markets where there's much less capital and much more room to grow based on the ratios. And then we have increased access to retail clients that can invest in funds like private equity, private credit, venture capital, that has more capital flowing to these asset classes. However, again, I want you to remember that all investments carry risk. There is no free lunch. And when you have opportunity for growth, there's always some type of trade-off. And this requires careful management. But I also want you to know that according to Tony Robbins and Ray Dalio, who is one of the most amazing investors, top 1% investors, is that the holy grail of investing is true diversification, which means you are not only invested in public stocks and bonds, but you have uncorrelated returns beyond those that add diversification and gives you an all-weather portfolio that can be successful in all market conditions and improve your long-term returns. And this was the original idea behind pioneering portfolio management that by David Swensen, who grew the Yale endowment by using this exact method of a blended portfolio, including public market assets like stocks and bonds and alternative investments. So if you want to learn more about alternative investments, go ahead, like this video, subscribe to the channel, subscribe to my email list. And now that I've explained why I'm bullish alternative investments, make sure that you check out my video that will be linked above on why private equity is pouring billions of dollars into investing in professional sports teams.